Welcome traders, my name is Mike Hamilton from Trade the Easy Way. And before we look at the indices and the Forex market, just want to dig deep and have a look at some of the underlying factors in this market. We've had some good fundamentals. GDP in the US was strong on Friday. Weekly job levels have been good. We've got US non-farm payroll on next Friday. So I'm looking forward to the week ahead and just looking at the underlying factors that's affecting this. And I'm doing that initially by looking at the stock sectors. And here you can see we have in basic materials, we ran up from early August into late August and then sold off at resistance and started coming down on volume. And that's always a strong trending signal. If you've got a directional move in the markets on volume, it confirms the move. But what's been happening at the back end of last week is we've got a little potential turn. Now traditionally, cyclically, markets will turn in mid-October and then run into Christmas from that period. Now, if the fundamentals are going to support a turn here, we could see a turn into the new month. But at the moment we've got seen good fundamentals, but poor performance and very choppy markets in the sectors and of course the indices themselves. You see industrial goods and services and technology have all got very similar patterns of coming off. Services has seen the volume flatten down. So we've come down on declining volume. So services could be an indication that the market is finding support and could see a bounce. Technology, I'm going to look at the Nasdaq in particular because I'm very keen on Nasdaq. I think Nasdaq has led the way pretty much of 2014, so we're going to take a close look at that. Again, a little bit of a decline in volume, very slow decline in volume as we've seen a drop, and of course the turmoil in Apple has had a big effect on technology on the Nasdaq. Okay, so at the moment we've got the potential for a little bounce in the light of what has been a very choppy market. This is the Nasdaq on the daily. So we had a sell signal up here at 4100. Came down to the 50 EMA on Thursday, and then GDP on Friday saw a little bounce to the upside and some short covering on Friday. The point is, for the bears, we have spent 2 days now under the 21 moving average, which is this moving average here. For the bulls, we've come down to the 50 EMA. We've typically faded the 50 EMA, in other words, bounced off the 50 EMA. And had a blue bar on Monday. So within this tight range, whatever happens in this range here, this is going to be my main indicator. Whichever way we come out of that in the early part of the week is a potential direction into the early part of October and potentially into for the next 3 months. The RSI has been divergent. RSI has come off as we have been coming up. That's a sure sign the market's getting tired, and the conviction of traders has been weak to bearish. But what happens, what comes out of this on Monday is crucial. If we break that low on Monday, then I would expect to start to wind down to some of these lower levels and potentially in the months ahead come down to this level here. However, close above 40.52, particularly 40.60, and I expect to wind up and potentially make new highs. So it's choppy, and there is a couple of big red bars in there, but equally a couple of blue bars that have found support at key levels. So it's a little hard to detect, but I am got a very keen eye out to see if this market can fail and continue what has been a weak September. Let's look at the weekly charts. The weekly chart on the Nasdaq is very high, divergent, with a red bar. So we've finished the week on a red bar, and we have narrowly closed lower than the previous week. So this is the 50 EMA now on my weekly chart. That's 21 EMA. I do apologise. It's still the same chart, isn't it? So we're still extended. A market that sits that high away from the 21 EMA generally means we are due at least a pullback. This market doesn't tend to stay away from the 21 EMA on the weekly chart too long without retesting it. And this divergence in the RSI, as we climb higher and see lower highs in the RSI, is potentially telling us that this market is too tired. So overall, you can see the chop in the market because it's just such. I've spent a month up here in a relatively tight range with a couple of dips underneath it. I mean, to me, I'm more convinced that market is too tired up here by that weekly chart. So I will be looking at a break of that daily support to see if that can come down to 3900 on the Nasdaq. Quick look at the weekly on the S&Ps. We've closed inside the previous week's bar, so there's a red bar. We've closed inside on the S&Ps and on the Dow. Dow is stronger, but still not closing above 17,150. 17,150 is a big line in the sand for me. At the moment, that market was not able to close above that level on Friday after pretty good GDP levels. Okay, so let's now look across to the currency markets. The US dollar CAD, I got a nice move out of US dollar CAD and closed it on Friday. Spent the week in US dollar CAD and called this in the room. So what I'm going to look for now, the reason why I closed it on Friday is because I want to buy a pullback. And I want to see if I can get a move back to that level, which is I want to see if I can get at least 110.50 on that one. So I want to see a 100-point pullback before I will get back into that one. It's possible we can only see 111.90 area or 111, around 111. Okay, but the strength in the dollar and the trending now of this US dollar CAD suggests to me that we have got potential further confirmation that this market could struggle. I'm not so bothered about the fact that we've got a potential rate rise coming up. I think the market has got to realise and does realise fully that we have got virtual zero interest rates in the US and they have to go up. There's only one way those rates are going to go up. But the Fed, when they do eventually increase rates, are going to do it very, very slowly, very tentatively. So I think the market can cope with that. If the market does drop, I'm not expecting any rush to the downside. I'm not expecting a crash. I'm just expecting a wind down and further profit taking in some of the sectors on the back of the increase in the strength of the dollar and a move to profit taking and safer havens. US dollar yen has been very slow. That is very extended. The RSI can stay high. No such thing as an overextended market on the basis that the market can keep the RSI as high for as long as it likes. And on this case, we stayed long from the RSI stayed extended from December 10 until end of May. So what would I do with that US dollar yen? Buy high is very tricky. Let's have a look at the daily. So we've engulfed Thursday's action. If you do want to get into this, I think the best you can expect is 109. And you're going to have a stop under 108.40. RSI is divergent, but we have engulfed, and we closed at the highs on the week, so that's still very bullish. In a consolidation like that, it's nice to get a dip. So any little sudden shock into 108, I would see that as a buying opportunity on the US dollar yen. Pound yen, it's a potential stopping bar on support, but break and close under 177 on Monday. That could drop. I'm just conscious of the fact that this is a big fat reversal bar. Whoops, I didn't mean to do that. What I meant to do was this. I meant to wrap that reversal bar up. So we closed underneath it on Thursday and narrowly held on Friday, but we didn't close above the bottom of that bar. So we are still, to my way of thinking, still potentially got the risk. The downside risk is higher. So the opportunities are potentially for this to roll over. But I think I think on the whole, it's probably a bullish consolidation. In a bullish consolidation, it's normally over after a dip. So I think we'll dip, come down the test to 21, and then potentially see a pushback higher after a move to 21. But short term, I'm bearish. The pound US has clearly given us a signal that as we go into next week, that is a short. Any push into 163 is a sell signal for a move back to 160. So the nice round whole number of 160. So we're seeing some weakness in the pound. The Euro US has been, ever since we came off of this area up here, any moves to the upside have been sold into, and this was a bearish consolidation. Took a long while to come out of that, but as soon as we closed under here, which was what date's that, hang on. As we closed down here on the 19th of August, we have been shorting ever since. You occasionally get consolidation to the upside, and then we just drop once they're finished with it. This is obviously still short, so any pullbacks to the 127 area is to be shorted. Euro yen, now that's got the 50 and the 200 EMA above it. A little bit like the pound yen bar. So if we can hold this level into the early part of the week, I think we could bounce. Otherwise, that could just roll over. But I think, the overriding colour in these bars over this period has been red. There's the reversal bar up here that we took a few days to come out of, which is currently where the pound yen is. So this could be what is in store, and quite likely in store for the pound yen. Once we fall out of this situation that the pound yen's got at the moment, then we could start to see some low levels. And so breakdown under 138.40 on Monday or Tuesday could be a good signal for that one. And the CAD yen is following suit. Aussie, US, any pullbacks to that one has been shorted. That is very low, but it's still got further to go by the looks of it. Okay, you can see even on this very powerful move Very powerful move off of this fib level right into the top of the zone. So this is the bottom of the fib zone. This is the top, and the pound Aussie has done a very neat move in this fib range. So that's a reversal bar, divergent RSI. This pound Aussie, at the very least, need a breather, come down to 182 before I think it will resume and push higher. So we're seeing pound weakness into the week ahead. Quick look at data. We have the most interesting data on here, I think, is the Chinese manufacturing on Tuesday. So we'll see the impact of that as we open our charts on Tuesday morning. I'm very interested in this UK current account and GDP on Tuesday, 9:30 UK time, and we have CAD GDP on Tuesday. Very little US data. US consumer confidence 3 o'clock Tuesday, and manufacturing data Wednesday morning. Manufacturing data in the US Wednesday afternoon. Then we get weekly jobs in the US on Thursday. European rates on Thursday, and then non-farm payroll on Friday. So a fairly busy week. And looking for further US dollar strength, pound weakness in the early part of the week, further euro weakness, and just looking to see how those indices react on Monday after the data on Friday, GDP data on Friday, and the potential for that to move into jobs on Friday. Alright, on Monday's Traders Roundtable, I will be looking at how the pound and the euros performed on Monday and looking at stock scans on Monday. So do join me for stock scanning at the Traders Roundtable on Monday. Ask me for a link and for a free trial if you're not already involved in that. Okay, so please join me on that. Watch out for some events that I've got lined up for you, and keep in touch, and look forward to seeing you at the next video. Thanks, bye.